presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compak YouTube update for May the 30th, 2023. I'm Mo Ansari, President of Compak Asset Management and host of Market Wrap. You can tune into the daily broadcast every day. You can get all the media that we do. You can go to compak.com/media. Just type that in and it will give you all the information on the broadcast, on everything that we do, that you can get the daily updates that I do, the broadcast that I do, the weekly newsletter. These, whenever I post an update, you will get notified. So there's and the seminars and webinars that we do, you can get all that information there. Let's talk about this week, the Fed. What are they doing? That's going to be the big news, I think. I know everybody's focused on the debt ceiling talks. I've talked about that for the last month, and I've said it's really not that big of a deal. This is just a political circus. They're going to come to an agreement sooner or later. Now that the agreement, in principle, is there, but now it has to be voted on by Congress and the Senate. There will be a lot of griping on both ends of the spectrum, but I think there's enough congressmen in the middle, the moderates on both sides, that are going to have enough votes to pass this. Same thing will happen in the Senate. It doesn't give everybody everything that they want, but it doesn't give, it's something that mollifies just about everybody. I'll talk a little bit about the market. We'll take a look at the economy, do some technical analysis, and the week ahead. Let's start with the Fed. This is interest rates, annual average rates. You can see 30-year mortgages hit about 7%. They've come back down a little bit. Now they're sort of stabilized. Same thing we've seen with the Fed fund rate. The expectation is it'll go up to here. This is a peak somewhere here, and we're going to see Fed fund rates start coming down. Same with the mortgages. So all the expectation is rates are going to be coming down. It's a matter of when they'll start coming down. Market is expecting one rate cut maybe by the end of this year. I think, again, I've said that all year, said that last year. The market is just hoping to get that rate cut. I don't see that much weakness in the economy. And that's really what will determine how quickly we get interest rate cuts or not. The market, looking at this is where the gains have been, all in technology. Last year, all was in energy. That was the biggest. It went from number one to the last this year. It all fluctuates. That's why trying to chase the hottest sector, if you chased that last year, you ended up with all energy, and this year you're in the worst sector of the year. That's why having a diversified portfolio is so important. Looking at the Treasury yields, they've come back up on the anxiety that we're not going to get the debt ceiling done. That caused a lot of people to buy some Treasury bonds for safety. I think it's more a case that the market is getting a little bit nervous. There was an 83% probability that the Fed will pause at the next meeting in a week and a half or so. Now the expectation is only 50-50. The chances of Fed pausing or the Fed raising interest rates by 25 basis points is 50-50. So with that, the interest rates have gone up a little bit on the short term. Looking at the economy, this is what we've seen: crash landings, where we've seen the terrible recessions that we've seen, where the market, real GDP has come down dramatically, unemployment has gone up dramatically, and that's what we've seen, and the nominal GDP. You can see these are the hard landings. That was 2020 and 2008 and 9. Then these are hard landings where we see real GDP. These are the soft landings that we've seen in all the recessions. This is the consensus right now, that it's going to be a soft landing as far as the economy is concerned. If the Fed can do that, I still don't see a recession yet. I know this is the most advertised recession we've heard of in the last 30 years. Everybody has been looking for it, just like they were looking for inflation for 10 years. Finally, they found it when the Fed printed $5 trillion. Now everybody's looking for a recession for the last year and a half. Haven't found it yet, but I think we are coming to a slowdown somewhere. where we will spend all the money, have spent all the money that was of the COVID relief programs and all of that. People are starting to get back to work. Economy is slowing. We're getting back to real interest rates instead of the zero interest rate policy that was out there. Inflation remains elevated, and I think that is why we have to worry about the Fed not cutting rates or keeping the rates high for longer and not pausing at the next meeting. I think it's data dependent. It'll depend on how the unemployment numbers come out for the month of May, how inflation numbers come out for the month of May. Fed will have both of those numbers before they make a decision in June at the next meeting. So if you have the CPI stronger than expected, unemployment not going up, more jobs being created, then I think the Fed will say, look, we've done whatever. Nothing has happened yet to the economy. We've got to do more to slow the economy down. If we see a slowdown and unemployment start to move up, inflation continues to go down, it'll give the Fed some room to pause and say, look, we'll see what happens and we'll wait. I've got a webinar coming up on June the 6th. If you want to attend the webinar, go to compak.com/seminars, webinars, and you can register there. You have to be registered. It's going to be the evening of the 6th of June. It is absolutely free, no cost or obligation, and I will try to answer as many of your questions as I can. Then we have a live seminar that I'm going to do in person on the 27th in Scottsdale, Arizona. If you want to come and attend, again, go to compak.com/seminars. Right here at the bottom, you can see that right here. It says compak.com/seminars. Go there and you can register. It is free again. I will answer your questions. Again, we try to limit those in-person seminars, try to limit the number of people that can attend. So if you want to attend, come in. Let's look at the technicals. This is the S&P daily chart. I've talked about this gap, 4,200 to 4,218. We had to get above 4,218. Well, today we hit 4,231 as a high. If we can decisively get above 43, 4220 or 30 right here and close above that, then we do have a target of 4,300 right here for the Fibonacci's and Fibonacci target, and then 4,400 becomes the long-term target. Will we go there straight now, or will we have a correction over the summer and then go up in the fall? We'll have to wait and see. It depends on what the Fed does, and I think that is more important than the debt ceiling talks. That's what we've got to see. Again, a number very critical is 4,200 for me. We broke below this line right here, and that was in July of last year, and we've been below it ever since. If we can get above 4,200, that means all our long-term indicators, this is a weekly chart going back to 2019. Each one of these lines that you see here, all these lines, vertical lines that you see, are 1 week of trading. If we close this week above 41.98, that would be a very positive indication. Here's the daily chart of the NASDAQ. It has gotten decisively above 12.6 to 12.7. That was my target initially, but we have decisively gone through this resistance area right here, and we are at 13,032. Next target now will be the August high of last year, which is 13,181. That's the number that I'm looking at for the NASDAQ. If the NASDAQ can get to the August high, that correlates to 4,300 for the S&P. So if we can get decisively here, we can get some more rally. The Fed pauses, we've got the debt ceiling done, we could see a little bit more rally. On a weekly basis, the dot plot turned up, the dots are below the market. These turned up at the beginning of this year. We've seen a little bit of a correction here, but it looks like we are in a nice uptrend now, and we've been there for some time since the beginning of this year. So it's looking pretty good for the NASDAQ overall. 10-year note resistance is right here at 4.09. We are right about 3.7 today. Support is 3.612. I think rates are going to stay in this range. I think between 4% right here, that's the top of it, and the bottom right here, about 3.25. And that's where rates are until we get some clarity on the economy and see what the Fed is going to do. Week ahead, the big news will be the unemployment data that we get this Friday, and then we have to see how we get the inflation number, and then what does the Fed do? Those are going to be the drivers of the market over the next couple of weeks. Those are my thoughts. Those are my views. Again, if you'd like us to come and talk to us to help you with your portfolio, develop a plan for you, just go to compak.com and set up an appointment. You can come by the office here in Newport Beach. You can come by in San Jose, or you can come by in Arizona, or wherever you are. We can set up a meeting for you. All you have to do is go to compak.com. Just go to our website and just send us a message. Thank you again for joining me. I will be back with you soon. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.